First mover Asia. Why did Bitcoin regain $27,000? No one is surprised by Gensler's actions, crypto CEO says. Also, why Binance's alleged commingling of assets isn't the same as FTX's alleged commingling of assets. Good morning. Here's what's happening. Prices, Bitcoin and other cryptos rally despite new SEC action. Insights, Binance and FTX have both been accused of commingling assets, but there are differences. Prices. Bitcoin regains lost ground with a few zigzags along the way. Bitcoin shook off the Securities and Exchange SEC enforcement week to climb back up above $27,000 on Tuesday for the first time since the weekend. The largest cryptocurrency by market capitalization was recently trading at $27,200, up 3% over the past 24 hours. BTC sank near $25,400 on Monday in the hours after the SEC announced a lawsuit against Binance, the world's largest crypto exchange by trading volume. But Bitcoin started edging upward by the end of the day and continued its path even as the SEC announced a second lawsuit against Binance rival Coinbase on Tuesday, and later in the day asked a federal court to grant a temporary restraining order to freeze assets tied to Binance, U.S. The fact that the market has rebounded leads me to believe that this was at least partially priced in. Joshua Franklin, CEO and co-founder of digital asset information services platform The TIE, wrote in an email to CoinDesk. No one is surprised by Gensler's actions. Ether also spent much of Tuesday on the upswing to trade near $1,900, a 4% gain from Monday, same time. BNB, Binance's exchange token, which dropped about recently, rose about 2% the day after plunging more than 10%. Beta and Sol, the tokens of smart contracts platforms Cardano and Solana, regained slivers of ground lost amid lawsuit aftershocks, with the former rising about a half a percentage point and the latter more than 1%. Layer 2 platform Polygon's Matic was down about 5%. In its filing, the SEC identified those tokens, among 13, as unregistered securities. The CoinDesk Market Index, a measure of crypto market performance, was up 8%, fueled by AI euphoria and recent gains among several tech giants, including chipmaker Nvidia. The technology-heavy Nasdaq Composite and S&P 500 both rose slightly, with the former hitting its highest point in 10 months and the latter in more than a year. The TIE's Franklin noted that institutional investors remain ambivalent months after crypto exchange FTX's spectacular collapse in November and the increasingly harsh U.S. regulatory environment. Many funds that invested in FTX got burned, and some partners that led their firms' FTX deals were fired, Franklin wrote. As a result, many VCs are feeling nervous to enter crypto. There is a similar trepidation among institutional allocators like pensions and endowments that broadly were burned on their earlier crypto allocations. Franklin added that even hedge funds that were not too long ago accelerating their participation in the crypto space faster than any other institutional group have also applied the brakes amid concerns about regulation, a lack of credit and viable venues to trade on in the U.S., limited custody options, and angst about doing business with digital asset firms that may not survive in the wider crypto contagion. These are just a few of the many concerns that they have, Franklin said, although he added more optimistically that we are seeing significantly more positive developments in Europe and Asia. Insights. Binance and FTX's alleged comminglings aren't the same. Binance is facing a Securities and Exchange Commission SEC lawsuit alleging poor financial controls and misuse of customer funds. Weeks prior, internal control issues took center stage in a Reuters report accusing it of commingling customer and company funds, which the company's chief communications officer has refuted. Comparing and contrasting the accusations that Binance commingled funds with those against FTX, which also commingled funds, might be tempting. However, these comparisons are superficial. While they could both be described as commingling, the process and implications are different. In its complaint, the SEC suggests that billions of dollars of customer funds were accessible to entities connected to Binance CEO Changpeng CZ Zhao, namely market makers Meritpeak and Sigma Chain. Among the allegations from the SEC, $200 million was reportedly transferred from BAM Trading, a Binance-related entity, to Sigma Chain, another entity controlled by CZ, and a Binance bank account sent CZ $62.5 million. If true, it's hard to call this anything but commingling. But missing here is any mention of BNB, its native exchange token. Center to FTX's commingling problem is FTT and how it played a role at Alameda Research. As CoinDesk reported last November, a large portion of Alameda's assets consisted of FTT tokens, which were issued by FTX. This arrangement raised massive questions about the interconnectedness of the two entities, particularly given that the value of the FTT token is partly sustained by FTX's own activities. Alameda, a market maker and investor, was a material stakeholder in the crypto economy at the time. Thus, the market was dutifully concerned about how much of Alameda's investing power was printed out of thin air. This isn't the case for BNB. Binance isn't an investor like Lambda was, and BNB doesn't compose the material portion of anyone's balance sheet. Sure, Sam Bankman-Fried also later admitted to not segregating customer accounts, which later formed part of the prosecutor's case against him. And this sounds a lot like what CZ is being accused of. However, Binance's accusations revolve more around the alleged diversion of customer funds and interference in U.S. operations, while the issues with FTX/Lambda pertain to blurred lines between the two entities and the non-segregation of customer funds. Similar, but different, things. And we'll see in the coming weeks how much of CZ's empire this takes out. Important events. The Non-Fungible Conference Portugal, Brussels Blockchain Week Belgium CoinDesk TV. In case you missed it, here is the most recent episode of First Mover on CoinDesk TV. Crypto markets down after SEC charges Coinbase. Binance. The crypto markets remained down as the SEC announced it was charging Coinbase for operating as an unregistered securities exchange, broker, and clearing agency. The announcement came less than a day after the SEC charged Binance with multiple securities violations. Ashley Ebersole, Xerox Labs chief legal officer, weighed in on the details. Plus, Vettel Lund, K33 senior analyst, dove into how the markets are reacting to the developing news. Headlines. Atomic Wallet was breached by North Korean hackers. Elliptic wallets that siphoned Atomic users' funds are connected to the known Lazarus Group's addresses, crypto tracing firm said. Gary Gensler's evolving position on crypto. In quotes, the SEC chair has gone from supporting the technology at MIT to a full-swing offensive on the crypto industry. Optimism completes Bedrock hard fork in pursuit of Superchain. Developers behind the Layer 2 scaling solution for Ethereum say the upgrade will reduce gas fees and cut deposit confirmation times. 1-2 Punch finally registers SEC view on Binance, Coinbase, rest of crypto. The mystery is over for how the U.S. Securities and Exchange Commission will come after the digital asset sector's big platforms, though alleged skeletons in Binance's closet drew more ire.